Good evening, students. I welcome you all in our today's session, which is going to cover the topic of set off and carry forward of losses. In the last session, we have covered clubbing provisions. And in today's session, there is a new chapter, what we are going to discuss, and that would be regarding the set off of losses from the income. A very interesting chapter and very important also for the point of view of solving of numerical, because in this chapter we will see that if any head of income, if any source of income is having loss, then how can we are going to set it off from the other income, etc. So before starting the class, there are some queries, I guess. So let me take those queries. Good evening, Tej Pratap. Good evening, Soumya. Ishan is asking, good evening, sir. Could you clarify that the transaction under Section 60 do attract clubbing provisions? Right. Section 60 is regarding when you transfer any income without transferring of asset. So if you transfer any income without transferring of asset, so that income is going to be clubbed in the hands of the transferor. Okay. Astha is asking, sir, if an individual transfer right to receive income from the property without transferring the property to the minor grandson, then that income will be clubbed in the hands of that individual and not in the hands of minor's parents. Look, if the asset does not transfer, in your question, you are saying that without transferring the property. So section 60 says very clearly and very straight provisions are there that if income has been transferred without transferring of asset, in that situation, that income is going to be clubbed in the hands of the person who transfer that income. That means in the hands of the transferor. So there is no point of clubbing in the hands of parents, etc. Because the asset is still in your hand. So if asset is still with you, then income is transferred to anyone is going to be clubbed in the hands of the person who transfer that income. Okay. Tanu, good evening. Astha is asking, sir, clubbing provision of cross transfer will how be valid if made in two different financial years? Look, the cross transfer cases is depending upon the fact of the cases. So if in first year you transfer via cross transfer provisions and try to dodge the tax, in the next year there is another transfer. Suppose Mr. A transfer income to Mrs. B at the end of the March 2025 and Mr. B transfer income or money or property to Mrs. A in the next financial year. So if the income tax department comes to know about this in the next financial year, then the income which has been earlier did not clubbed is going to be clubbed in the year in which income tax department will come to know about the fact. So it depends upon different scenario on the basis of different facts. If it has been proved, the main concept of cross transfer was that if it has been proved that tax has been dodged by circumvent the provision of law, then clubbing would be there in the year in which it has been proved. Okay, so if even if the financial years are different, that does not make a difference. In the year in which income tax department will come to know about this cross transfer, in that year the implication would be there. Rajveer, good evening. Soumya is asking, sir, interest from bank received by minor on deposit made out of his special talent, will this be clubbed with parent income? Now, this is a good question, a logical question. And the answer is yes. Why, Soumya? Because minor provisions are very clear about one thing, that only income from skill, talent, or physical work is not going to be clubbed, and any income of minor who is suffering from disability is not going to be clubbed. Any other income except these is going to be clubbed. So the interest from bank received will fall under any other income. It is not a special knowledge, talent, physical work. And if it is not a disabled child suffering from disability in section 80U, then this interest or dividend, etc., is going to be always clubbed. Okay. Harsh, good evening. Rajveer was having the same question. So Rajveer, I have answered the exact question asked by the Soumya. So I hope it is clear. Priya Mishra is asking, sir, I have a doubt. You said when are not having uh, SI, special talent, I guess. What does it mean? Substantial interest. Yes, okay. So I have a doubt. You said where are not having substantial interest, both qualified, then salary is clubbed in the hands of the person having higher income. But in the books, it is written that when both have substantial interest qualified, then it is clubbed in the hands of the person who is having higher income. Can you please clarify? It's the same thing. Except that salary income, Priya, except that salary income. All other income, whatever is the total of all other income. I am not telling the other income means income from other source. No, it was an example. I have written that other income is this. So other income means if they earn business income, if they earn capital gain, if there are house property income, if they are income from other sources. So except that salary income, all other income, that the total income, except the salary income, whose total income is higher, in that person hand, the salary is going to be clubbed. So other income does not mean what I explained to you in the example. It does not mean income from other source. It means any income other than that salary income, which we are going to clubbed in the hands of the person. I hope it's clear, Priya. Astha is saying, sir, if minor has earned from batting, gambling, etc., from illegal activities, still would be clubbed? Yes. So even if that would be a casual income, and casual income does not fall in the category of physical work, talent, or special knowledge. So that is going to be clubbed in the hands of the parents. Absolutely. And income tax does not make a differentiation between legal or illegal income. Income is income. So it's going to be taxed whether it's illegal or it's legal. It does not make a difference. Kushal is saying, good evening, sir. I am new to this class. Welcome, Kushal. I welcome you in this class. Mrs. Priya Mishra is saying, husband and wife are not having, substantial interest. So if husband and wife are not having substantial interest in that situation, there would not be any clubbing provision. Clubbing provision would be applicable only if, in case of remuneration to spouse, if any one of them having a substantial interest or both of them having substantial interest in that organization. If there is no substantial interest, there would not be any clubbing provision applicability. Tanu is asking, sir, if Mr. A transfer his income, which he received from sale of debenture to his mother, then clubbing applicable? No. Clubbing is only applicable if you transfer any income or property without consideration to your spouse, son's wife, and minor child. If you transfer it to mother, father, brother, sister, etc., even to major children, then clubbing provision would not be applicable. Ishan Bist is asking, sir, I have a doubt in test your knowledge question number 4. Why loss reduced from capital employed? Ishan, when you earn a profit, in case of a company or proprietorship or a partnership firm, where that profit goes, that is going to be added into the capital. So your capital increase with the effect of profit. So what if there would be a loss? That is going to decrease your capital in the same way. So if you are earning any profit, it is going to add back into the capital. You have seen that na profit transfer to the capital account. So if it is plus, if it is positive, that is going to the capital. And if it is negative automatically, then it's going to be reduced from your capital. Same transaction treatment. If that is positive, that is going to add your capital. If it is negative, that is going to decrease your capital. Okay. Arshada is asking, so that means only income from a special talent by minor is clubbed with parent, right? Rest are other income. No. You are, I guess, saying opposite. Income from a special talent is not going to be clubbed. Not going to be clubbed. You have written that is clubbed with parents. No, special talent, skill, and physical work income is not going to be clubbed. all other incomes are going to be clubbed, Harshada. Okay. So under section 64(1)(7), how income indirectly arising to AOP from asset transferred indirectly to such AOP will be clubbed in the hands of transferors. Sir, how indirectly? So suppose I transfer an asset to a trust and I have made a provision that the income which is going to be earned by that trust is going to transfer to the AOP. And also make an agreement that AOP will transfer that income to my spouse or son's wife or minor child. So in that case, you can see that income is not directly going to the AOP, but indirectly via trust, etc. So in that situation also, clubbing provision would be applicable. So the intention is this. If you transfer income directly, indirectly, via AOP, via trust or etc. for the benefit of minor child, son's wife and spouse, the clubbing provision is going to be applicable. Priya is saying, so the point of doubt is you said when husband and wife are not qualified. In the books, it is written when both are qualified. For reason of clubbing, if they are qualified, that is not going to be clubbed. Let me show you. Wait, just let me show you. Might be you are studying in any other way. Let me show you. Clubbing provision notes, and let me show you your study. Okay. Okay. On which page that is, Priya Mishra? Can you tell me which page you are saying that it has been written if they are qualified, then there is no clubbing? Okay, it is cleared now. I guess you have written it's cleared. Okay. So logically, it's very simple to understand that if there is talent is there, then there cannot be clubbing. Let me show you. So you can see both husband and wife having substantial interest. So where both husband and wife have substantial interest in a concern and both are in receipt of income by way of salary, etc. So always remember clubbing would be applicable only if they are not qualified. As the second point suggests, if they are qualified and having substantial interest or no substantial interest, there would not be any clubbing concept. Okay. Okay, next. Dhanush is asking, sir, what is substantial interest? Dhanush, that's a basic concept definition. Substantial interest means when you are having voting rights or profit sharing ratio in any organization is more than or equal to 20%. So if you are having voting shares or profit sharing in any organization 20% or more, that means substantial interest. Arshada is asking one doubt from TYK, question number 2. Yes, Arshada, go ahead. What is the doubt from test your knowledge question number 2? I have already solved all your test your knowledge question. This is question number 2. What do you want to ask, Arshada? In this question, which point you want to know? Ishan is saying like reserve and surplus in balance sheet. Yes, in case of a company, and in a normal case, in a proprietor's business or in a business of partnership firm, that is going to add back into the capital. In the same way, if there is a loss, that is going to be reduced from your capital. So capital value would be automatically reduced. Tanu is asking.
Hello.
Hello.
Yeah, good evening, sir. Harshada here.
Yes, Harshada. Which point you want to ask?
So the income from house property and substantial interest.
Income from
Commission.
property.
It is 25,000 is a commission and.
This point number B you are asking?
Yes, B.
So what is the confusion in this?
So actually my confusion is in the presentation, no, they have shown 25,000 that I got to know because it's for commission.
Your voice
Because
is not clear. Please, little.
okay, as Mr. A is having substantial interest in the firm, That's why she is getting. So that income will be clubbed with Mr. A, 25,000. And
Yes,
as she is not professionally qualified, right?
yes,
So
yes.
in the in that presentation, no, 25,000. So beside that, 70,000 maybe from the salary income they have means written over there. So just confusion about it, how to present that, like.
The presentation you want to understand.
Yes, yes.
Let me show you.
This one, that even from that income from house property is 52,000, so that 30,000 will not be deducted. 30%, sorry.
Achha, 30% is not deducted. Okay, let me.
I-
Look, if the question says na like this, you can see income from house property computed. If in any income what has been computed has been written, that means it is the net income which is going to be taxed. If that
Okay.
rent received 52,000, listen carefully. If it is rent received, then you need to deduct 30%. Like there is
Okay.
question, there would be written salary computed. That means standard deduction has been reduced. But if it is gross salary, then you need to apply those deduction, etc. So if the word
Okay.
has been written, so that is a net income which should be included after all municipal taxes, deductions, interest, etc. So you need not to deduct.
Okay.
Okay.
Okay. So we can directly consider that amount.
Yes, 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 exactly. Of course. Clear?
Okay. Yeah. Thank you. And the presentation, sir?
Presentation is normal. You just need
But
to add that income from house property in the hands of Mr. A. Simply like
no,
this.
no, no. That below that commission part.
So the
Point number
commission
B.
part is going to be your salary income. We need to add back into this salary income or to which it relates.
Okay.
There is nothing special. Look, I have also told in the last session, clubbing income is no technical separate head of income of taxability. So if commission received, etc., in which head that should going to be taxed? In the hands of Mr. A, commission needs to be taxed under income from other source. So in the hands of Mr. A, that is going to be taxed under income from other source. As simple as that.
Okay. That's why they have shown in the separate columns.
Yes, yes, in a separate column. So you will understand, the student will see and understand, okay, where that commission is going to be taxed. That has been taxed under income from other source head.
Okay. Got it. Thank you, sir.
So let's see. Tanu is asking, then it is taxable in the hands of mother as other source? No. Tanu, that gift received from the son would be from relative. So that is going to be exempted in the hands of mother because she received it from son. Harsh Kaur is asking, sir, please explain conversion of self-acquired property into HUF topic number second point. Look, the provision says if you convert your property into the HUF, you transfer your property into the HUF via donation, etc. Otherwise, then educate consideration. Then that is going, the income which is going to be arise from that property is going to be clubbed in the hands of the transfer. Now, second point you are asking, okay, the second point says, even when the partition take place, if that HUF, under that HUF, when the partition takes place under section 171, whether it is partial partition or full partition. So whatever asset you have transferred, suppose you have transferred a house property to your HUF, and that from that house, 4 lakh rupees rent we are receiving every year. So what will happen, that 4 lakh rupees is going to be taxed in the hands of Mr. A, who has transferred that house property into the HUF. After 5 or 6 years, HUF is going to have partition. And after partition, that house property has been divided into 4 persons, 4 member, 4 co-partner of that property. So suppose each of them is now receiving 1 lakh rupees rent. So the provision says, out of that property which has been transferred by the member of a HUF to a HUF at the time of partition or on or after partition, the amount of income arise to the spouse of that transferor, the amount of income from that property which is received by the spouse of that transferor is going to be clubbed in the hands of that transfer. Suppose Mr. A has transferred that property, rent was 4 lakh. So 4 lakh is going to be clubbed in the hands of Mr. A until partition happens. After partition, 1/4 share is going to be received by Mr. A, that means 1 lakh rupees income, and 1/4 is going to be received by Mrs. A. So that Mrs. A portion of income 1 lakh is going to be clubbed in the hands of Mr. A. Okay. Soumya is asking, income of accretion of transferred asset to minor will be clubbed in the hands of parent? Yes. Except in case of minor, if there is other case, it's not going to be clubbed. But in case of minors, it's going to be clubbed. So if minor child earn from KBC, then that would be not a special talent. We have discussed about the KBC case also under casual income, that it is not by talent, it is by luck. So that would be a casual income of that minor child. It is going to be clubbed in the hands of parent. Okay. Okay, Asta query also solved. Ishan is saying, but sir, commission usually a part of salary income of an individual. So why in other source? Because there is no relationship of employer and employee between Mr. A and that salary received by the commission received from that organization. So because there is no relationship of employer and employee exists, so that's why commission is going to be taxed under income from other source. And commission is going to the part of salary only when there is this relation exist. Okay. Soumya, sir, any income arising from the income from an asset transferred by the parent will be clubbed in the hands of parent, including the income arising from income earned by skill talent. No, skill talent income is not going to be clubbed, Soumya. All other income is going to be taxed. Somesh is asking, in test your knowledge 2, part D and E, both are separate case. Let me see that. Somesh, just a second. You test your knowledge. Yes, these both are separate cases, correct. 5 में मिस्टर ए की सैलरी हायर कैसे है? सौम्या इज आस्किंग. सैलरी हायर चेक नहीं करनी, एक्चुअली आपको अदर देन सैलरी इनकम हायर चेक करनी है. देखो, बी इज अ कर्ता ऑफ एचयूएफ whose member drives income as follows. Income from B's profession, Mrs. B salary as fashion designer, minor son D, because deduction of 75,000 need to be given from Mrs. B income. That's why the salary of Mr. B would be higher. So from Mrs. B salary, you need to deduct the standard deduction because computed word has not been used. So the only salary in the hands of Mrs. B would be 1,000. Okay. You have the solution, you can go for it. So student, let me start now the today's provision because it would be really, we need to cover a lot of provision. And if there is any doubt regarding clubbing, etc., so we will take in the other session. So we are also having session of TDS and then test TDS, then written filing, and then computation of total income and tax also. So you can ask me any problem in those sessions also. So today we are going to discuss our topic, that is set off and carry forward of losses. A very interesting topic, and in my opinion, very easy to solve also. And this is set off and carry forward of losses under income tax. Now, first of all, just try to understand this concept in a very layman language, in a very simple language. Suppose that every head of income, we are having 5 heads of income under Income Tax Act. These are salary head, then house property, then PGBP, then capital gain, and then income from other sources. Fine. So can you tell me, out of these 5 heads of income, under which head of income losses can be arised? Losses is possible under salary head of income or not? Losses is possible under income from house property or not? So under which category of income losses is possible? So because you have gone through with the provision of all heads of income, So you must have an idea that under which head of income loss could be there. Rajveer is saying capital gain, PGBP and house property. Kushal Wadhwani is saying capital gain. Anubhav is saying PGBP. Salary, it's not possible. So one thing is very sure that under salary head, there could not be any losses. There could be only nil. Either you are not earning any salary income. So either salary would be nil or it would be in positive. It cannot be in negative. Clear? House property can have loss due to your interest liability or municipal taxes paid, etc. It is possible for having losses under the head house property. Of course, PGBP income can have loss. Capital gain also can have loss. But income from other source technically having three kinds of income. One is casual income. That is winning from lottery, etc. game show. So under income from other source, can casual income be negative or casual income can be having loss or not? Yes, casual income cannot have loss because no expenses is allowed out of casual income, no deduction, nothing is allowed. So casual income cannot having loss in any case. Either it could be nil or positive, just like salary. Fine. Now there's a new income and that is called owning and maintaining race horses activity. Owning and maintaining race horses. Now, owning and maintaining race horses is a business activity technically. We are not talking about for those person, those are going to having betting on the horse races. No. If I am betting on a horse race, that would be my casual income. We are talking about for those person whose horses are running in that race. So horses is like their asset and they are trained those horses and they participate. And if they won the race, they get money or that could be like their revenue. So owning and maintaining race horses is a business activity, but it has not been included under Income Tax Act under PGBP head. So even if it has been a nature of like a business, because in this case, you are going to purchase horses, you are going to make expenditure on the maintenance of horses, on their food, medicine, maintenance, etc. So they are having the same kind of activity. It's like a business nature. But the problem is this, because there would be trainer, you need to pay salary to them. So there would be a place, a building where horses are there. You need to purchase a plot on which they will getting training, etc. So having like a characteristics of a business, but because that is a different kind of business on which betting, etc. is legally allowed in our country. Only in case of owning and maintaining race horses. In our country, only race horses are allowed of having legal betting, etc. So this has been included for the purpose of income tax under income from other source. The reason, the logic behind is in this horse race maintenance business, the possibility of losses is higher than the income. Because if 10 horses are running, only one or two or three are going to win, others are going to lose. So if it has been included under normal PGBP, so what will happen? That would result majority in case of loss. And this loss business can set off the other income of normal businesses. So government had played a very smart role and they has just separated this business into income from other sources and other incomes. So in this horse race business, there is a possibilities of having loss and technically there are more probability of having loss in comparison to income. In case of other income like interest, dividend, etc., again, that would be either positive or nil. So technically now you can see in case of salary, there would not be any loss ever. In case of house property, PGBP, capital gain, or owning, maintaining race horses, there is possibility of losses. Clear? Okay. Tej Prakash is running like a horse and he's asking, sir, if other income from other source loss cannot set off from other heads, we will discuss each and everything. Just have patience. Abhi, just what we discussed. I just discussed with you what head could have losses and those heads, those cannot have losses. We just discussed it. Everything has been written in the law. What would be your query that is going to be solved? Just have patience for a few minutes, okay? Now, how this loss scenario or income scenario setup is working? Let me give you a very normal, very interesting example. Suppose there is a house. We are not talking about house property, okay? I am giving you a very layman example. Suppose there is a house, and in this house, A, B, C, D, E, F, G. Certain members reside. They all reside in this house. Suppose house number 18 is this. This has nothing to do with house property case. I'm just giving you an example of practical example. Now, suppose in this house, having almost 7 members, A and B having a dispute together. And they start fighting. A is saying B is wrong, B is saying A is wrong, and they start fighting. Now, to resolve this fight, who will supposed to initially take action to stop this fight? Of course, the other member of the house. To resolve this, of course, there may be C will come to solve this problem, or D, or E, F, or G. So they will try to solve this problem, that what happened, why are you fighting, what is the reason behind that fight, and maybe they'll try to solve this problem. So there could be two results. Either this fight is going to be solved, or that is not going to be solved. Suppose the issue goes worst. Now everyone is start fighting due to A or B. Now C, D, E, F, G, A, B, everyone is fighting. And fight becomes a severe fight, a serious fight, a massive fight. So now if they are not able to solve it, then the other houses, people like neighbors, etc. will come to resolve this problem. That is a practical case. If there is a house and two kids are running, fighting to each other, then their parents will come from that house and they'll try to solve this. If they won't be able to solve it, and suppose the issue really became massive, then the neighbors will interfere, or police will come, or somebody else will come to resolve that. In the same way, losses is going to be set up almost. Now they PGBP head, that is also a kind of a house, a kind of a place. There could be different losses. Suppose I am running 4 kind of businesses. One is my textile business. I am also having a pharma business. I am also having a ready-made shop, garment shop. I am also providing some services. So I am running 1 professional activity and 3 business activity, but they all are part of PGBP. So they all are a part of a house. They all are a member, suppose. Now, if textile business is having loss and pharma is having profit and ready-made business having loss and service sector also having loss. So 3 of these activities having loss and 1 is running in profit. I have also some income under capital gain head. I am having long-term capital gain. My PGBP house. So the losses will not go outside this house. First of all, this profit will try to resolve all these losses problem. Come, let me set off your losses. Suppose the profit is 10 lakh. The loss from textile business is 5 lakh. The loss from ready-made garments is 4 lakh and service is suppose 3 lakh. So now we are having 12 lakh losses and 10 lakh profit. So we cannot go to set off our losses to the capital gain first. No, first of all, we have to set off my losses in this house with the profit of the other source of business. So my ready-made source of business, service source of business, or textile source is having loss, but my pharma source of income is having profit. So we will set off our loss from this head. Out of 12, 10 is going to be set off from here. The balance 2 lakh. Now this dispute of 2 lakh has not been resolved in this category of house. Now you are allowed to go to take help from other heads of income. In the same way, if there is house property, one is self-occupied, one is let out. Self-occupied is having loss of 1 lakh and let out is having profit of 3 lakh. So this will not go to capital gain set off. No. First of all, you have to try to sort the issue within this same head. So issue has been resolved. There is now no problem. 2 lakh is going to be income of the house property. Now suppose capital gain is not having any kind of income. And now I am having, suppose the loss is now 3 lakh, not 2 lakh. Suppose just now it is not 2 lakh. Suppose this was 6 lakh. So only 10 lakh loss has been resolved, 3 lakh remains. Now 3 lakh can go and take help from house property head of income. Even out of setting of this, 1 lakh loss would be there. And now we do not have any other income left, suppose. So if loss could not be set off from same head of income, so this 13 lakh losses of PGBP, we only able to set off 10 lakh. Remaining 3 we try to solve and it has been set off from house property but only 2 lakh. So even after setting off from other heads, what we will do with this loss? This loss is going to be carried forward for next year. And in next year, when there would be income, then we will try to set off this loss. So this whole chapter of set off of losses from your income is divided into 3 parts. The first part is this, which says in the same head of income, PGBP head, in the same head of income, if you are having losses from different source, first of all, try to set off that loss from the same head of income. We called it intra head. Listen carefully, that is called intra head adjustment. So intra head adjustment means you have to set off your losses from your same head firstly. So this is intra head in this case, and this house property matter we have solved also was the part of intra head. So we apply the intra head concept at PGBP head and house property head. If after intra head, if there is any loss remaining, then you can go and take the benefit of other heads of income. Now this is called interhead. Understand? This is intra-head. Intra-head means within head. And inter-head means other head benefit you can also take. So this is my B part of provision. So first of all, we have to understand the intra-head and then we will move on to inter-head. And after that, if even after inter-head, the loss remain, then there's a concept of carry forward and set off of losses in future years. So this full chapter has been divided into 3 categories. But there is some interesting case also. It is not that simple that from the same head, you can set off of losses. No, it is not that simple. There are some exceptions also. That you can set off your losses from the same head to the income of the same head. But there are certain special cases. Like if you are having speculative business losses, speculative business, you must have gone through with the provision of speculative business under PGBP head. So if you are having any speculative business loss, that loss cannot be set off against normal business profit. If you are having speculative business loss under PGBP head, then you cannot set off that speculative business loss from pharma business, textile business, ready-made business, or service. Speculative business loss can only be set off against speculative business income. That means same nature of income we need to set off that speculative business loss. So there are some exceptions also. Some exceptions are also under interhead adjustment. Business loss cannot be set off against salary head of income. So we have shifted this business loss and set off against house property head of income. But if there is salary head of income, then business losses cannot be set off from salary head of income. So there are exceptions under intra-head also that we will discuss in detail and inter-head also. I'm just telling you this exception concept because it is not that simple that all the losses you can easily set off from the income and remaining you can set off from other head of income. There are exceptions we have to keep in our mind. Then there are exceptions also in case of carry forward and set off. If you carry forward any loss for the next year, then only intra head power remaining with that loss. In the current year, you can set off that business loss from the same head also. And we shifted 2 lakh losses from house property head also. Now we are left with only 1 lakh rupees business loss. And we carry forward it to the next year. So in next year, this loss can be only set off from business head. This loss cannot be set off from house property income of next year. So if any loss, if that is going to be carry forward in the next year, in the future year, there is no power of inter-head. Carry forward losses only have power of intra-head. They do not have power of inter-head. So this whole chapter has been divided into these 3 broad provisions. So one by one, we are going to discuss it. Why I have explained you this chapter like in the initially like this in a summary? Because when we discuss the provision, now you will understand, okay, we are on the first stage. If you are having a question in your mind, sir, what if intra-head losses does not set off? Then you know, okay, now there's a topic of inter-head also in which my query is going to be resolved. Okay, so now we are discussing this concept one by one from this notes. Okay. So look, exactly Tej was asking, sir, IUFSO loss cannot set off from other heads. We will discuss each and everything, Tej. Anil is saying you are great, sir. Thank you so much, Mr. Anil. Okay. So aggregation of income, in certain cases, some amount. Aggregation means we need to aggregate it. So if you are having income, we need to aggregate and it becomes our GTI. So if you are having losses, that is going to be deducted from other income also. In certain cases, some amounts are deemed as income. We take this. Okay. In the hands of the assessee, though they are actually not in the nature of income. These cases are contained in basic concept section 68, 69, 9A, B, C, D. Black money concept we have discussed in chapter number 1. Fine. So please do not ask me that what is this section 68, 69. So you can go and watch the basic concept chapter 1 classes in which we have discussed in detail. You can see it has been written over here also. That chapter 1 we have already discussed. The assessing officer may require the assessee to furnish explanation in such case. If the assessee does not offer any explanation or the explanation offered by assessee in these cases are not genuine, then these income also going to be the part of our income. Fine. This paragraph does not have any connection with this set of concept. Now concept of set off and carry forward of losses. So there are set off means in this previous year and set off of category A and category B. There would be one intra-head set off and there would be one inter-head set off. And if anything has been left our inter-head, that is going to be carry forward. So this is step number 1. Then we will use step number 2 and this is my step number 3. Okay. So specific provision have been made in the Income Tax Act 1961 for set off and carry forward of losses. In simple words, set off means adjustment of losses against the profit of another source head of income in the same year. So set off means whatever we are going to do in the same year, that is intra or inter. If losses cannot be set off in the same year due to inadequacy of eligible profits, then loss is going to be carry forward for further assessment year. There's a limit also. In some cases, you can carry forward it for 4 years. In some cases, you can carry forward it for 8 years. And there are some cases in which you can carry forward it for infinite time period. Infinite, no time restriction on that. So now we are discussing category 1. In category 1 was what? Intra-head set-off. Or you can understand it like same head set-off. Or एक और नाम भी है इसका, we can call it inter-source in the same head. So sources means if you are having 4 business A, B, C, D, so we called it separate sources. So in the same head, you can utilize one source of loss to set off from other source of income. For example, also you can see, suppose under house property head, you are having house 1, house 2, house 3. House 2 and 3 is having loss and house 1 is having income. So you can set it off and then net house property income would be 1,50,000. Same under PGBP head. You are having PGBP from manufacturing business, PGBP from trading having loss of 70,000. Manufacturing having 1 lakh income. So you can set off and the net effect would be 30,000. So that kind of setup would be called intra-head setup or same head setup or inter-source also we can call it. So set off loss from one source against income from other source under the same head of income. That is called inter-source adjustment under section 70. The loss in respect of income shall be set off against the income from any source under the same head. Now, very simple provision. Under the same head of income, you can set off any losses from the income of the same head, except there are some exceptions. So we need to understand only now the exception. So what are the exceptions that we are going to discuss? That is very important because the basic provision is very simple and very general. It says in the same head of income, you can set off any loss under the income of the same head. But you have to keep in your mind the exceptions. Those are very important. Okay. Vasudevan, Mr. Kevin is asking, sir, I did not understand illustration number 9. Mr. Vasudevan, example, the last part of the answer. So, Mr. Kevin, it is from clubbing provision you are talking? If yes, write it down. Sir, it is from clubbing provision. Kindly write it down the page number also. I will take that illustration, okay, in the meanwhile. So, inter-source adjustment. Under this section, you can go through it exactly explaining what we have gone through, that under the same head, you can utilize one source of income to set off from the other source under the same head. Like losses from house property can be set off against the income from another house property. Losses from one business, say textile, can be set off from same source of income under the head PGBP. Now, this is very important. Impermissible. You can see this sign talks about which is not allowed. So these are called impermissible inter-source set-off. So we can call it exceptions. So under intra-head, there are some exceptions. General rule, you can utilize the profit of the same head against set of losses of the same head of any source. But now you have to be very careful to understand the exceptions. Now, impermissible inter-source set-off. Inter-source set-off, however, is not allowed, not permissible in the following case. The first one, long-term capital loss. Now, under capital gain head, there are only two kinds of losses or profit could be there. Long-term, short-term. If you are having a short-term capital loss, it can be set off from short-term capital gain, or it can be set off from long-term capital gain also. So under capital gain head, suppose you are having a short-term capital loss of 1 lakh and there is a short-term capital gain is 40,000. Let me show you with the help of an example. This is capital gain head. Suppose you are having long-term capital gain of 1 lakh, short-term capital loss of 50,000, short-term capital gain of 30,000. So you can utilize this loss against this source of income. Short-term loss can be set off from short-term gain. So remaining loss would be 20,000. And because this is again under the same head, we are talking about intra head. So this short-term capital loss can be set off against long-term capital gain. So after setting off, what would be the final result? Long-term capital gain would be 80,000. This is clear. But the exception is for long-term capital loss. Suppose now the example change. Capital gain, long-term capital gain is 80,000 and long-term capital loss is 1 lakh. And there is short-term capital gain 50,000 and short-term capital loss 10,000. Now this is going to be set off. You are having 40,000 short-term capital gain. And after setting off long-term loss from long-term capital gain, now you are having long-term capital loss 20,000. They both are under same head, but long-term capital gain falls under the exception provision. So short-term loss can be set off from long-term gain, but long-term capital loss cannot be set off from short-term capital gain. So the first exception under intra head is long-term capital gain long-term capital loss can only be set off against long-term capital gain. It's long-term, na? It is an ego. I am long-term capital loss. Short-term is short-term. It does not have any ego. Short-term say, okay, I have no issue. I will be set off from short-term gain, and I can also go to and set off from long-term. But long-term name is long-term, so long-term is having a ego. So this is just for remembering purpose. It's not a logic behind it. It is just a remembering that you can remind that okay, long-term is having an ego issue. So it says I am only going to be set off from same category of person. Like long-term will be set off. Long-term will not go and set off from short-term capital gain. Understood? The first exception is long-term capital loss. Okay. So the exception is for losses, not for the profit. So you can see short-term loss can come to the long-term gain and can avail the set off benefit. So only losses have the ego, not the income. Income does not have the ego. The ego is having with the loss. Okay. So this is first exception. Sangeet Havani is asking long-term need to be carry forward. Yes, that we will discuss in the carry forward concept. Anil is asking, sir, can you explain with logic how it's impacting income tax department? Like, will there be dodgement of tax in case of long term? Because long term was having higher rate of tax. So they don't allow you to take this benefit of higher rate of tax gain. Short term was having lower rate of tax. That is the basic reason behind all tax provision under the Income Tax Act. Okay. So first exception was long-term losses. Now the other is speculation loss. Now speculation loss, as we have discussed, is having special character. So if you are running a business and that it is a speculative business, and if there is any loss arise, the same concept applicable. The speculative business losses cannot be set off from any other business. As the same in case of long-term capital loss. Suppose this is PGBP. And again, only losses is having the exception. Only the losses is having the ego, not the profit. Suppose the speculative business is having a profit of 1 lakh. And my textile business having a loss of 90,000. Then this loss can be go there and can have the set of benefits. So the remaining speculative business income would be only 10,000. But if the case scenario is opposite, now suppose speculative business is having 90,000 and textile business is having 1 lakh profit, then that is not going to be set off. It says I am only going to be set off with the speculative business income. Suppose I am having one speculative business. I am also running one another speculative business in which there is a profit of 50,000. So now 50,000 loss can be set off and remaining 40,000 cannot be set off. And let me tell you, the exception, like long-term capital loss is having exception, speculative business is having exception. If they do not set off, if they do not have any same head of losses, same head of income, so they always go for carry forward. You need not to go to even inter-head adjustment. So those are not listening their business activities. Those are having ego with the same head of income. So they are not going to set off with other head of income automatically. So those exception what you are reading, if they are not going to set off under intra-head adjustment, then automatically they are going to carry forward concept, because these exception, whatever you are reading over here, the same exception is for intra-head also. Intra-head also we will read long-term capital loss cannot be go to any other head. Because if someone is not ready to being set off under the same head, how they will compromise their ego and will be ready to being set off from the other head of income. So those are the exception of interhead, that is intrahead. Automatically, they are also the exception of interhead adjustment. Okay. So you are going to read all these provision again under interhead adjustment. Kirti is saying, sir, STCG is set off with STGC and LTCG. Yes, STCG is no issue. It can be set off from STCG, STCL. STCL can be set off from STCG and LTCG both. Okay, that was a question what I do not want to listen from Mr. Dhanush. Sir, what is speculation business? Like speculation business must have been discussed under PGVP chapter. So I guess Dhanush, you should go and watch the PGVP classes so you would be able to understand what is exactly speculation business. But for the time being, let me tell you all what is speculation business. Any kind of business, any kind of trading. In trading, whatever we do sale and purchase of commodity. That is called trading, sale and purchase of commodity. So if there is sale on purchase of commodity, but without physical delivery, that is called speculation business. Just like in case of shares, it happens generally. It happens generally in case of shares. So if you purchase shares on an intraday basis, intraday purchase and sale of share, that would be your speculative business. That is example of speculative business. Okay. Yes, so Mr. John, there is no extra detail about the aggregation of income. If the question asks regarding the aggregation of income, you can write it down that paragraph. तनुज सिंह, जो अपने पेरेंट्स की नहीं सुनते वो पड़ोसी की क्या सुनेंगे? करेक्ट. जब मैं बच्चों को हिंदी में समझाता हूँ ना सेट ऑफ लॉसेस, तो मैं ऐसे समझाता हूँ कि एक घर है, उसमें 10 बच्चे हैं, आपस में लड़ाई हो रही है, तो पहले घर के पेरेंट्स समझाएंगे उन बच्चों को कि चुप हो जाओ, शांत हो जाओ. तो पहले अगर उनसे शांत हो गए तो बहुत अच्छी बात है, एडजस्टमेंट हो गया लॉसेस का प्रॉफिट से. लेकिन अगर कुछ एक्सेप्शनल बच्चे हैं, जैसे लॉन्ग टर्म कैपिटल लॉस, जैसे स्पेकुलेशन लॉस, वो बच्चे हैं जो घर के बिगड़ चुके हैं, तो वो जब अपने घर में ही लॉसेस को सेट ऑफ होने की परमिशन नहीं देते, तो वो दूसरे हेड की तो बात सुनने से ही रहे. एग्जैक्टली सेम एप्लीकेशन में बच्चों को सिखाता हूँ. ओके. Vinita is asking how many years carry forward speculation loss. We have the provision. We will discuss after intra-head. We will discuss inter-head, and then we will discuss carry forward. For time being, speculation losses can be carry forward for 4 years. We are going to discuss it. Okay. Chalo. So third problem or exception is losses from the activity of owning and maintaining racehorse. Now you understood? Owning, maintaining racehorses losses cannot be set up from any other income under the same head. And of course, it cannot be carried forward from other head also. So this is also going to be carry forward. So speculation business is going to be carry forward if not set up. This is also going to be carry forward. Losses from specified business. Section 35 AD. You must have gone through under PGVP head. There are specific business. Those can avail the deduction of section 35 AD, like hotels, hospital having 100 beds of capacity, cold storage, warehousing, pipeline network, etc., semi-fabrication unit manufacturing, etc. So if you are carrying that specified business, and you must have remembered that section 3580 deduction is applicable only if you are opting out under section 115 BAC. So in case of assessee exercising the option of section 30 out of default tax regime, provided under section 115 BCA 1A, loss in any specified business. So which business we are talking about? Those business can claim the benefit of section 3580. So these business also is having an issue that if your business is those business, those can avail the benefit of section 3580. And if this business is having loss, then can be set off against same category of business. Under same category of business, you can claim or set off your loss. Normal business, you cannot set off that loss. However, losses from other business can be set off against profit from a specified business. So as I have told you, whatever the exception, long-term capital loss is having exception. Speculative business is having exception. Owning, maintaining race horses is having exception. Their losses is having exception. 35 AD business having exception of losses. So their losses cannot go to anyone else except themselves. But other losses, other business losses can be set off from normal speculative business. Short term can be set off from long term. Any other loss can be set off from owning, maintaining racehorse income, and other business losses can be set off from 35 AD profit. So their profits are free, but their losses are freezed. Okay. Losses from an exempt source cannot be set off against income from a taxable source of income. From the point of view of set off chapter, if there is any income which is exempt from tax, suppose agricultural. So if there is any income which is exempt under income tax, and if suppose that income is earning loss, suppose you are having an agricultural business and you are having 4 lakh rupees loss. So that would have no treatment under the set off chapter. That would be as nil for the purpose of setting off of loss because their income is not taxable. So when someone income is not taxable, so we treat the income of agricultural as nil taxability. So that is not going to be the part of my GTI. So if income cannot be included under GTI, how the loss could be treated under GTI also? So agricultural income or any income which is exempt from tax, if that has been given in the question, the loss of that income has been given in the question, kindly treat it as nil. No treatment for the purpose of set off, etc. Okay. So that was intra-head adjustment. Now we are moving on to inter-head adjustment. The good thing is almost same concept are copy pasted, like exceptions are exactly same. So we have discussed 4 exceptions there. Long-term capital loss, speculative business loss, and owning, maintaining racehorse business loss, and 35 AD business loss. So these 4 are exactly same over here. Under interhead also, they are exception. They are not going to be set off from other head also. And some new exceptions are also joining this. Short-term capital loss also joined inter-head adjustment. So short-term loss can be set off from long-term gain or short-term gain, but under the head capital gain. But short-term capital loss cannot go to set off from any other head of income. So short-term capital loss has no benefit of inter-head adjustment. So for the purpose of inter-head, we can say neither long-term can go for inter-head and nor short-term. So long-term already we have know that that is not going to be under inter-head adjustment. But now short-term also joined it. So technically we can say the capital gain head losses cannot go to other head of income for set off. Why I am writing capital gain? Because long term earlier also included and now short term also joined it. So capital gain losses will remain under the capital gain head. With the exception that short term can be set off from both kind of income, but only long term can be set off from long term losses. So you can see the first exception where the net result of the computation of any head of income other than capital gain is a loss. The assessee can set off such loss against his income assessable for that assessment year under any other head including capital gain. एक और इसको ज्वाइन कर रहा है, that is business losses, PGBP losses. Now PGBP losses can be set off from other head of income except PGBP losses can be set off from capital gain. PGBP losses can be set off from house property. PGBP losses can be set off from other source income also. But PGBP losses cannot set off from salary head of income. So you cannot set off PGBP losses from salary head of income. Understand? Capital gain, we have already discussed that capital gain losses cannot go into the other head of income. So already 4 exception was there. A new exception added, that is short-term capital loss cannot go to any other head. So technically, this was the result that long-term, short-term cannot go to any other head of income. Then the 6th one also joined it. 4th was there. 5 was this one. And 6th one is PGBP losses cannot be set off from salary head of income. Now the 7th is here. As 7th is having special applicability. 7th is applicable if section 115 BAC applicable. If section 115 BAC applicable, then house property losses cannot be allowed to be set off to any head of income. And if section 115 BAC not allowed, not applicable, if you are under optional tax regime, then house property losses can be set off from other head of income, but maximum limit is 2 lakh. So if section 115 BAC applied, then house property losses cannot be set off from any other head of income. And if section 115 BAC not applicable, then maximum 2 lakh rupees house property losses can be utilized to set off from other head of income. Suppose house property is having 3 lakh rupees losses, then 2 lakh is going to be set off from the other head of income if there is income. Remaining 1 lakh is going to be carried forward. So the losses under the head income from house property would not be allowed to be set off against income under the other head if assessee pays tax at concessional rate under section 115 BAC. If he is shifting opt-out section 115 BAC and there is loss under that income from house property, then the income accessible to any other head of income, the maximum loss to be used to be carry and set off from other head of income would be maximum 2 lakh. In that situation, excess of 2 lakh rupees need to be carried forward. You cannot set off any amount exceeding 2 lakh rupees as a loss under income from house property. You can see speculation business losses cannot be used for inter-head. It has been repeated. Same point number 6B, section 35 AD special category of business losses cannot be carried forward and set off. Cannot be set off under inter-head adjustment. Same concept of exempt income for inter-head adjustment also as it was for intra-head adjustment. Let's see. This Pooja is asking, losses of other business can be set off owning and maintaining race horses business profit? Yes. Losses of other PGBP can be set off from other head of income. And if it is owning, maintaining resources, we can utilize that. Tanisha is saying, sir, we can also say that long-term capital gain. I guess you want to write it down, long-term capital loss. Speculative business, 35 AD and horses business losses are likely big siblings. They can solve problem of all family members. also other people, but they don't share the problem. You can understand the way you want, but we cannot write like this in the examination. Okay. But I guess you understand the logic behind it. That's good. Other source income set off from capital gain. Tej Prakash, other source income would not have loss. So how you are going to set it off from capital gain? Not possible. Because owning, maintaining racehorse is a special category of loss that cannot be set off from any other category of income. Interest, etc. cannot have loss. Casual income cannot have loss. So how other source income would have loss, which could be utilized against capital gain? So that is not a question. That is not practically possible. Anubhav is saying, sir, please correct me if I am wrong. Salary income cannot be used to set off any loss from any other. No, you are wrong. Only business losses cannot be set off against salary head of income. If you are having a house property losses, you can set off it against salary head of income up to rupees 2 lakh rupees. So only business head of loss cannot be utilized against salary head of income. Dhanush is saying, sir, in capital gain, we can see intra set off, but no inter set off. Absolutely right. Under capital gain, only intra head set off is allowed, but inter head not allowed under capital gain. Very well done. Sir, can other head losses be set off against house property income? Yes. PGBP. Look, these are the exception. Except this, everything is free. There is no issue. Tej is saying, no, sir, other source have losses can be set off from capital gain. Tej, I am saying other sources would not have loss. Then how you will set it off from capital gain? Loss laoge kahan se other source mein? Look, let me solve your question first. Let me correct your question. So Tej is asking that, sir, what if an income from other source is having loss? Can this loss be adjusted against capital gain? He is asking this question. Now, Tej, let me correct your question. I have explained you under income from other source, either there could be a casual income. Now, casual income cannot have loss. Either it could be nil or that could be positive. Fine. There is owning, maintaining racehorse. If there is a business of owning, maintaining racehorses, then if there is loss, it could be set off only against owning and maintaining racehorses income. And other income are like interest, etc. So there could not be any loss. Fine. Okay, now you are saying, no, sir, income from other source, not other source like PGBP, house property. What are you asking? I am really confused. Please explain your question in detail. Okay. So now let me show you in a simple process that what are the exception, what losses we can utilize to set off under which category of income. Kalpana is asking, can we set off loss from income from other source such as from casual income? Yes, there is a very interesting thing. Casual income does not allow any kind of deduction, not even expenses, not even deduction, not even basic exemption limit. So no loss can be reduced or no loss can be utilized against casual income. Casual income is intact. Nobody can touch it. Nobody. No negativity is allowed against casual income. So let me explain you, students. Understand this concept like this. Under PGBP head, first of all, if we discuss intra-head concept. So it says all business losses can be set off against any business income. And there are this exception. Speculative business losses. This is exception. Exception means this can be set off against speculative business profit. Fine. 35 AD business losses. If section 115 BAC not applicable. That could be set off against 35 AD businesses profit. Now, all other kind of business, trading, services, manufacturing, other business losses can set off any business, whether it's speculative business profit, whether it's 3580 profit, whether it's any other business. So no restriction except this under intra-head adjustment. So pehla intra-head clear? What are the exception? How it will be applicable in the examination? So if you are having losses under this category of business, you can utilize this losses again intra-head against any business activity. No restriction. Restriction on only these two losses. Now moving on to capital gain. Now capital gain, intra-head exception. Only one exception is there. That long-term capital loss could be set off against long-term capital gain. So now what is the short-term capital loss status? You can set off against long-term capital gain. You can set off against short-term capital gain. No problem, no restriction. Clear? Now third loss head would be income from house property. What is the restriction under intra-head adjustment? No restriction. No restriction is there. If you are having a loss under self-occupied or under loss let out, allowed against self-occupied, let out, self-occupied, let out. Generally, self-occupied property would not have profit. That would only in loss. But there is no restriction, no exception. Any house property loss can be set off against any other house property. There is no exception applicable. Okay. Salary head would not have any loss ever. So अब क्या बचा? Income from other source. Intra head restriction क्या है? Owning, maintaining racehorse. This loss can only be set off against owning, maintaining racehorse profit. Simple. There would not be any other loss. But a special thing to make you all clear one thing. If there is a casual income, no loss of any head can adjust against casual. So casual income is locked. Nobody can touch it. It is casual income. So you understood by this format that what are the exception, how we can utilize the losses. So that was intra-head. Now let me tell you with the same format, what is the intra-head exception are there. Now PGBP head, in case of inter-head, PGBP losses after applying intra-head provision, PGBP losses can be set off from capital gain, no issue. Long-term, short-term. PGBP losses can be set off from house property. No restriction. Whatever amount. If the profit is there, you can set it off. So clear? But PGBP losses can also go to income from other source. But now you should understand under income from other source, they cannot set off against casual income. Because casual income cannot be utilized for anything. Clear? And under salary head of income, this loss cannot be carried forward. So now you understood what is the restriction for PGBP losses under inter-head. So exceptions are also there, but with the help of this diagram, you will be clearly understand that what kind of loss I can utilize against setting off which kind of income. So whatever your queries are, repetitive queries, that this loss could be set off from this or not, all your queries will be resolved with this diagram presentation. Now capital gain. We all know capital gain losses, inter-head not allowed because long term already blocked. Now short term also say I am not going anywhere. So that is going to be carried forward automatically. Now house property losses under inter-head maximum 2 lakh allowed to be set off. That is only if 115 BAC not applicable. If 115 BAC applicable, then what will happen? Interhead power, no interhead power with house property. So if 115 BAC not applicable, then maximum 2 lakh you can set off from PGBP, no restriction. Even from capital gain, no restriction. Even from salary head, no restriction. And even from income from other source, but again wahi except casual. Clear? This is house property. Now income from other source, we do not need to write it out because under income from other source, only owning, maintaining racehorses could be losses. And if that is not set off, that is going to be carry forward as in same case of capital gain. If not intra head adjustment, then that is directly going to be carry forward. So there is no rule for inter head adjustment in case of income from other source and capital gain. Now it is clear for all of you what kind of losses we can set off against which kind of income. I hope it is clear to all of you now. Priya is asking 3580 business losses can be set off only against 3580 business profit, provided 3580 business profit should also be there to 15 BAC. Like 115 BAC, under section 115 BAC, there is no 3580 business exist. So this 3580 business concept would not be applicable if you are following default tax regime. So it will only be applicable if you are following optional tax regime, Priya. Okay. Casual loss can be set off against casual profit. Anubhav, casual income could not have loss. They're not allowed to reduce even expenses. So if they do not have allowed expenses to reduce, how there could be loss? There could not be ever loss under casual income. We have discussed it under income from other source concept. Kalpana is asking, can we adjust PGBP loss under speculation business and owning, maintaining horse race business profit? Yes, I have just write it down over here. Normal PGBP loss, you can set off from speculation business, not a problem, allowed. I have written over here. Other business losses, any PGBP, whether speculation business, whether 3580, whether any other category of business. And if you want to go to other sources, yes, you can set it off if there is profit arise from owning and maintaining resources. Tanisha is saying clear, sir. Okay, sir. Sir, I am saying PGBP loss and house property loss set off from capital gain. Yes, now you must have cleared about it that we can use PGBP and house property losses against capital gain. Maybe I was not able to understand your query earlier, but I guess Tej, now it must be clear to you. Okay. Soumya, great explanation of chart. Thank you, Soumya. Chauhan is saying house property loss only set off against salary. Not only house property against salary. House property loss, I have written it down. It can be set off from PGBP also, capital gain also, and salary also. Okay. Yes, PGBP loss cannot be set off from salary head of income. Casual income meaning explains that Vinita, if this kind of question you will ask, na, that will be really difficult for me to cover this chapter. Casual income topic has been the part of income from other source class. So please, you can go on YouTube and watch that lecture. So it would be really easy for us also because we have limited time and we have to complete the chapter in a single session today. Okay. Fine. So I guess now it's time for a short break. You all must be very tired. So we are going to have a short break and then we will come back. We will discuss the carry forward provisions also. So Mr. Manish, can we go for a short break? Hey, welcome back, everyone. So there was a query from Mr. Anil. He's asking, sir, in case assessee opted for default tax regime with PGBP loss and house property gain, in that case, will there be any change in set of provision? A very good question, Mr. Anil. But if assessee opted for section 115 BAC, there would be two changes. First, house property losses cannot be set off from any other head of income. Clear? And it cannot be carry forward also. The second, the under PGBP head, there would not be any specified business under section 35 AD loss be there. So that 35 AD losses concept would be gone, and losses of house property you cannot set off under any other head of income. Page is saying salary can set off against house property losses. Only correct, sir. Now this is your correct thing. Yes. Only house property losses you can set off against salary income because PGBP cannot be set off. Capital gain not allowed interhead, and other head losses is not going to be used for interhead adjustment. Asta is saying, sir, under section 115 BAC, 35 AD business as it's not exist. So it will be treated like normal business losses and thus will be set off intra-head normally and from inter-head except salary. Yes, you can say that because when you opt for section 115 BAC, then there is no specified business under section 35 AD exist. So although those income or losses would be under normal category of business, and accordingly, you can solve that question. Okay, a query from Mr. Kevin Norna was there. That was regarding illustration number 9 of clubbing. So I will take that query after today's session. Before ending the class, I will definitely going to take your query, Mr. Kevin. Okay. So let's move on to the rest of the provision. Before that, that was the thought for the day. And it says focus is more important than intelligence. And I do believe this thing. I do believe this thing. So you might be seeing relatives in your house or someone you may know that is very intelligent. But maybe he's not there where that person should be. So he are intelligent, genius. But you might be finding some person who is very genius in his academic, but maybe he's not getting that kind of job or reputation in his life. Why? Because focus must not be there or might not be there. So if there is an average student, an average person who has focus that I have to achieve this thing, this is the way, and I need to do work hard to achieve this thing first. So that is more important. So if you are intelligent person, but you are not focused, so that could create problem in your life. So in my opinion, focus is definitely more important than intelligence because an intelligent person without focus may be going to waste his intelligence. But an average person who is focused to achieve what he wants with the right direction, with the right strategy, definitely he or she is going to achieve whatever he was dreamed of. Okay. So moving on to the provisions, we just completed the inter-head adjustment provision. Now we are moving on to carry forward and set off of losses from house property. On the basis of the discussion, whatever we have done till now, you might understand how many types of losses could be there. So we would be able to understand how many kind of carry forward provision we need to understand. If I would ask you the type of losses, this is a format I am making for all of you. If you want to solve your set of losses question, it's a request, kindly follow this format. As I always ask you in capital gain topic also, that if you want to calculate tax liability, so kindly bring your GTI, divide into casual income, section 112A income separately, 111A, then 112, and then other income. So I have asked you to please categorize your income like that and then apply your tax rate accordingly. And in the same way, I would like to ask you that if there is a set of question, then kindly follow this format to solve that question. It will really make the solution so easy that once you will complete your question, you would just need to write it down the question information in this format and you will see the answer would be there. It's very simple. So What do you think? How many types of losses could be there? I am not asking in which head you could have losses. Now, the question is different. How many types of losses could be there? So, how many kind of losses you think there could be having different provision? How many types, students? So, if there is a set of question, kindly make this kind of format of 5 categories. Rajveer is saying STCL. No, I am asking types. Yes, like this. Tanu is saying 6 types. So I want to know 5 types, 6 types, 7 types, 8 types. How many types losses could be there? Because as many as kind of losses would be there, types of losses, there would be provision for carry forward and set off also. 5 types saying Soumya because she has seen that I have made a diagram of 5 arrows. So there could be 5. No, that's not the correct answer. So first part would be PGBP. Under PGBP, you have seen there are 3 categories or 3 types of losses could be there. One is speculative business loss. Second is 35 AD business loss, if that is optional tax regime. And the third category would be other PGBP losses. Understood? Then capital gain head. We could have 2 kinds of losses. Fourth would be long-term capital loss. And fifth would be short-term capital loss. Then house property. And you have seen under house property, there is no differentiation. So this is 6 category of losses. There is no different provision for let out property or self-occupied. You can set it off any kind of losses from house property unit 1, 2, 3 to any other kind of house property. So there is no differentiation. Now we are having salary. Under salary head, there could not be loss. There could only be income. Okay, so that is not 7 type. Under income from other source, there are 3 categories: owning, maintaining racehorse, and this is my 7th type of losses. Then we are having casual income. Again, that can only be positive, that could not be negative ever, and same in case of others. So technically now you can see there are 7 types of maximum losses. So there would be 7 provision regarding the carry forward and set off of losses category of business. Clear? So if I need to tell you all the carry forward provision, when we have discussing the concept of carry forward losses in initially today. So that was C category. I have discussed that A category would be for intra head, B category would be for inter head, and C category would be for carry forward. Under carry forward, I have discussed with you at that time that only intra head set of power would be there. If any loss is going to be carry forward, then in the next year, it could be set off only from under the same head of income. Interhead power has gone. Suppose if long-term capital loss is carry forward, then in the next year, it could be set off only against capital gain head of income. And even in that income, because it is an exceptional case, so it will be set off only against long-term capital gain. Suppose if speculative business loss carry forward, then in the next year, it could be set off only against PGBP head. And this is also an exceptional loss, so it would be set off against only speculative business income. But if other business like textile business loss has been carried forward, then in the next year, it could be set off only against PGBP head. It cannot be set off against capital gain or house property in the next year. If any loss has been carried forward, it need to be set off against same head of income. It could be set off from other head of business, 35 AD profit or speculative, that is allowed, but it cannot go outside of PGBP head. So carry forward losses is only having intra head power with the exception format. Exception they cannot ignore, they cannot violate. Exception they need to follow. Suppose there is a house property loss which need to be carried forward. So if it has been carried forward for the next year, it could be set off from house property income. Now it cannot be set off from salary head or capital gain or PGBP in next year. Understood? So now I am writing it down. First exception for C categories, this is very important, that any brought forward loss cannot be set off from any other head of income. It would be set off from the same head of income. Now the second, the time duration is very important. That which loss we can carry forward for how many years, except the previous year, except the current year in which we have tried intra head and inter head, except that year. How many next year we can set off? I am writing it down. So you would be able to understand, or in a instant case, you would remember all these years, that what is the year limit for carry forward and set off. If it is a speculative business, the time duration is next 4 years. So I am writing it down next years only. So except the current previous year in which you were having the power, the next 4 years you are able to carry forward and set off speculative business losses. For 35 AD, the time duration is infinity. There is no time has been prescribed yet. So you can set off this loss, and because it is an exceptional loss, so in the next future year, you could set off against the same 35 AD income, but there is no time limit has been mentioned. So we can take it like infinity. For other heads of income, other business income, it is 8 years. 8 next year, you can carry forward. If 8 year has been lapsed and you are not able to set off, suppose for next 8 year, there was no profit under PGBP head. So after that time duration, whatever we are mentioning, that loss becomes zero. It would be a dead loss. Then in the 9th year, we cannot carry forward that loss. For capital gain, whether it's long term, short term, the time duration is 8 years. For house property, it is 8 years. And of course, salary, not applicable. Owning, maintaining racehorse, it's 4 years. So it's 4 years for owning, maintaining racehorses and speculative business. For 35 AD, it's infinity. And for all others, it 8 years. So you can easily remember now that how many years I am able to carry forward my losses. So we are going to discuss all these provision, and all provision, there would be 2, 3 same concept, that the loss would be only set off from the same head of income. If it is exceptional, then it could be only set off under the same head of income, under the same income, like speculative business, 35 AD, owning, maintaining racehorses, and long-term capital loss. And again, they will explain for how many years you are able to carry forward it. Understood? Sure. Now moving on, with the help of notes, we are going to read these provision or understand these provision one by one. Carry forward and set off of losses from house property, section 71B. Now, can you tell me how many years we can carry forward it? Now, you know, it's 8 years. And which head? Same head. And if optional tax regime has been utilized. So you can see now, if the assessee exercise the option of shifting out of the default tax regime provided in section 115 BAC 1A, if you are opting for optional tax regime, only in that case you are able to carry forward the losses. In any assessment year, if there is a loss under the head income from house property, such loss must be set off against from any other head of income up to maximum 2 lakh. The unabsorbed loss will be carried forward for the following assessment year to be set off only against the income from house property. If you have applied for section 115 BAC, the loss under the head income from house property would not be allowed to be set off against income under any other head. The unabsorbed loss cannot be carried forward to the following assessment year also. Maximum period, now we know what it is 8 years. Once a particular loss is carried forward, it can be set off only against the income from the same head in the forthcoming assessment year. We have discussed it. If the loss has been carried forward, then only intra-head adjustment is allowed, inter-head is not allowed. You would be able to understand with the help of examples now. So Mr. A, age 35 years, submit the following particulars pertaining to assessment year. Income from salary computed. So because it has been written computed, that means you do not need to deduct standard deduction, etc. It is after that. So salary income is 4 lakh. So how I asked you to solve the question, losses from house property let out has been given, business loss has been given, and bank interest. So I've asked you, whenever there's a question of set off, just do this thing. Make these 5 category. First is PGBP. Then capital gain, you can write it down, no issue. Then house property, then salary, and then other sources. Now you just need to write it down the question. The question says 4 lakh rupees salary. And one also request from my side, always use the sign. If this is income, use plus sign. So you will not going to do a mistake. Losses from house property let out, 2,20,000. The third is business loss has been given 1 lakh. Now, because the question is silent, so whether it's speculative or not, if question is silent, always treat it as other normal business loss. So it is 1 lakh rupees. And bank FD interest 80,000. So that would be the part of 80,000. Now question says, you have to solve this question by applying, supposing default tax regime applied and ones like default tax regime not applied. So if first of all we try to solve this question assuming under optional tax regime. So we are having business loss. Can we set off our business loss from salary income? The answer would be no. Can we set off our business loss from other source of income? The answer is yes. So out of this 1 lakh, how much I can set off from other source? Only 80,000 I can use from interest income. So my interest income would be nil and the business loss now remaining is 20,000. Salary income against I cannot set it off. So if interhead is not possible now anymore, so this is going to be carry forward. Clear? Now house property loss can be set off from salary, but it is 2,20,000 and maximum we can set it off 2 lakh rupees. So because optional tax regime allowed 2 lakh rupees set off, so the remaining salary head income would be 2 lakh. So there is only income remaining of salary head, that would be my GTI. And what we need to do with balance 20,000 house property loss? This is also going to be carry forward. So out of this question, 20,000 of PGBP needs to be carry forward. 20,000 house property loss going to be carry forward and 2 lakh would be my GTI. If that is optional tax regime. Suppose this is not optional tax regime, this is default tax regime. Then my PGBP 1 lakh loss could be again set off from income from other source 80,000. So that would result 20,000 carry forward. House property loss of 220 now cannot be set off under default tax regime. So salary income would be 4 lakh. So my GTI would be 4 lakh. And my carry forward business loss would be 20,000. And we have discussed that this loss cannot be even carried forward under default tax regime. So in the solution, we have to show the GTI and what we can carry forward. And you can see the exact solution, how we need to solve it in the examination. This is under normal provision of Act. Under optional scheme, the 2 lakh was the salary income left. So that would become my GTI. And 2 losses need to be carried forward. That is 20,000 house property and 20,000 PGBP loss need to be carried forward. That has been mentioned under notes. If it is a default tax regime, then in that case, my GTI would be 4 lakh. 20,000 business loss can only be carried forward and house property losses cannot be carried forward. So once you will make that diagram, you just need to put the information of question in it. If you are able to put it the question information in this format correctly, let me tell you, 80% of your question is automatically solved. After that, it's just addition and subtraction, keeping in mind the exception. That's it. So that's it. Very easy to solve. If you apply this format, I'm assuring you, it's 95% chances that your question will be easily solved and correctly solved. If you try to solve this kind of question vertically, this income, then losses, there would be a huge confusion in my opinion. So please use this format. So that was the provision regarding house property carry forward and set off. Page is asking carry forward shows in notes or main answer. In the next example, you will see that in the study also it has been presented as the main answer, because in this question, they only ask about the GTI. So we just show the GTI and show in the notes. If the question asks regarding the carry forward, you will also going to show the that in the main answer. Okay. Kushal, yes. So in house property losses under section 115 BAC, no interhead allowed and no carry forward is also allowed. Okay. You are right. Okay. Now regarding business losses. Now business losses having three kind of losses. Speculative is having 4-year, 35 is infinity, and other is 8-year concept. One or two more new concept also. Under that, assessee has the right to carry forward the loss from business and profession in cases where such loss cannot be set off due to absence or inadequacy of income under any other head of the same year. The loss to carry forward can be set off against the profit of the subsequent previous year. Carry forward can be set off from business or profession only. So same head need to be utilized in case of carry forward. That point we have already discussed. Now conditions. The assessee right to carry forward business loss under this section is, however, subject to conditions. The loss should have been incurred in business, profession, vocation. Of course, obvious, the loss should be related to our business. The loss should not be in the nature of loss in a business of speculation. Why? Because speculation business loss is having separate provision that has a time of 4 years and need to be set off against only speculative business income. Clear? Now, third point is different. Losses from one business can be carried forward and set off against the income from any other business. So that is also a general point. You need to set it off against the PGBP head only. Whether the textile business carry forward loss can be carried forward and set off under PGBP against manufacturing business or any other trading business, that is not an issue. But it cannot go into any other head of income. The loss may be carried forward and set off against the income from business or profession, though not necessarily the same business or profession, except in case of speculative business and except in case of section 35AD. Again, any loss cannot go outside any other head other than PGBP. Now, this is new point. Person who incurred the loss alone is entitled to carry forward and set off the loss. So assessee should not change. This is the summary or the main concept of this point, that assessee who have incurred the loss is only have the right to set off this loss and carry forward. So assessee should not change. What exactly it wants to explain? Suppose Mr. A running a business, a shop trading of shoes. Right? In this business, he incurred a loss of 10 lakh rupees. In the same previous year, suppose 24-25, having a house property income of 6 lakh. So interhead adjustment was allowed. So 4 lakh losses were there. So this loss he can carry forward. Now what happened in the previous year, 25-26, he transferred that business. He transferred his business. He transferred his shop to someone else, Mr. B. He discontinues this shop and he transfers this shop to Mr. B. Now Mr. B is having profit from this shop in the previous year 25-26, suppose 15 lakh. So can Mr. B carry forward this loss and set it off from this income? The answer would be no. Because the loss belongs to the assessee, not to the business. Even if you have transferred this business to Mr. B, even Mr. A has transferred this business to Mr. B, the loss will belong to only Mr. A. Now suppose in next year 25-26, Mr. A is having only house property income of 8 lakh. So because the loss will be always remain with Mr. A, PGBP loss carry forward. It cannot be set off because it's a carry forward loss, and carry forward loss cannot be set off against any other head of income. Suppose in next year 26-27, he opened another shop as a food point. And in this business activity, he earned 5 lakh rupees profit. Now this loss can be set off from this income. So the concept was this: the loss can be only carried forward by the same person who has incurred the loss. And he's the only one who can set it off. So even if my factory has been transferred to someone else, my shop has been transferred to someone else, loss is not going to be with the assessee. The loss will belongs to the me who have incurred the loss. So Mr. B cannot get the benefit of setting off losses, but Mr. A would be able to set those losses in the future also. But there is one exception. Assessee can be changed. The universal rule, assessee cannot be changed. But there is one exception in case of succession. Succession of business by inheritance. Do you understand the meaning of this word? Can anyone tell me what is the meaning of this word? That assessee can be changed. So the basic rule was assessee cannot be changed. So that means Mr. A is only allowed to set off these losses. But there is only one option, that maybe other than Mr. A. Suppose Mr. C can also setting off these losses if this is via succession of business by inheritance. So what is the meaning of this sentence? It's a very common word. Yes, Tej Prakash, business was still of the shoes. Still Mr. B cannot set it off. Yes. Transfer of business from father to son or successor. Legal here actually. Don't use the word son. It could be wife, it could be daughter, legal here. So if the business, suppose Mr. A had died and his business has been started or running by his legal heir. In that situation, assessee have changed. Suppose C is the son of Mr. A. In that situation, assessee changed. But if he is succeeding his business, in that situation, losses can be set up. I hope it's clear. Very well done. You all have given almost the correct answer. So this is the exception because I have given you an example. So now you will be able to understand this language. The losses can be carried forward and set off only against the profit of the assessee who incurred the loss. This is only the person who has incurred the loss is entitled to carry forward and set off the same. This is the common rule, general rule. Consequently, the successor of a business cannot carry forward and set it off. So even if the business is succeeding by Mr. B or C or D, he cannot do it except in case of succession by inheritance. In case of inheritance, that is allowed. Now, what is the maximum period we are talking about? Other business activities. So the time period is 8 years. If that is speculative or 35 AD, the time period would be 4 years and infinity. that is going to come. Now illustration number B. Income from salary computed has been given in the question. Assuming that he pay tax under section 115 BAC. So if I am going to solve this question over here, again the 5 category of income, so you would able to understand how to solve. So this is my PGBP. This is my capital gain. This is my house property. This is my salary. This is my others. So salary computed income has been given 45,000. So 45,000. Look, as soon as I will complete my question in this format, almost 80% it's solved. Income from house property 24,000. 24,000. And you have seen it is section 15 BAC. So this loss is going to be null and void. Let it be. Income from non-speculative business. Non-speculative matlab normal business. Other. 22,000 loss. Please use the sign always. Okay. Income from speculative. Speculative income having 4,000 loss. Short-term capital loss. And long-term gain taxable 19,000. So once you have write it down like this, almost question has been solved. Now you can see under business head, speculative business is there is no other income. So speculative is going to be carry forward because if the same income is not there, it cannot be used for interhead also. We are having 22,000 business loss. And we are having, first of all, we have to solve the question within head. So under business head, we do not have any profit. So before interhead, we have to see the intra-head concept. Now, short-term capital loss can be set off against long-term gain. Yes. So after that, we are having only 6,000 short-term capital loss. House property loss would be null and void because it is section 115 BAC. And now we are having salary income of 45,000. So this has been, intra-head has been done. Now let me ask you, for the purpose of interhead, can 22,000 of loss set off from salary head of income? PGBP losses cannot be set off from salary head and no other income. So this is going to be carry forward. Speculative automatically going to be carry forward. Short-term loss cannot be utilized for interhead. So this is also going to be carry forward. House property would be null and void. So no loss can be set off from salary head. So this would be my GTI and other carry forward concept we have already written. So where is the solution? You can see house property loss would become 0. GTI is this. Business loss 22 need to be carry forward. Speculative 4 need to be carry forward. Long-term capital gain has been utilized for 25,000 short-term. So balance 6,000 need to be carry forward. GTI would be 45,000. So this format I have developed only for the students to solve the question in the examination. If you try to solve it vertically, you would be very confused that which kind of loss I need to be utilized for claiming the benefit. Try to use this horizontal format and you would be able to solve question once you have write it down the question only. Okay. Now losses of speculation business. Here is a definition of speculation business. You can go through it. The main thing we need to understand that the time period is 4 years and the income only we could be able to set it up would be speculative business. No other income can be utilized for setting it off speculative business losses. So the definition of speculative business, etc., you can go through with your PGBP classes. I believe that must have been discussed in PGBP. What is the meaning of speculative business? Okay. Now, specified business, that means section 35 AD business. For 35 AD business means the same category of income you need and the time period is infinite time period. If that is opting out of section 115 BAC. If it is section 115 BAC, then this 35 AD losses would not be there. Okay. You can see that this is set off as indefinitely. There is no time limit has been excised. Kindly read this example for more clarification. It's a very good example to make you understand how you need to set it off. Losses under the head capital gain. We all know that long term and short term cannot be utilized for interhead, and it can be carry forward for 8 years, and it could be set off only against income under the head capital gain. Again, under capital gain, long term is going to be set off only against long term income, but short term can be set off against long term gain or even short term gain. So the provision has been automatically, we have already discussed. I just wanted to discuss with you some test your knowledge question. So it would be really good for you that you will be able to understand a concept very clearly. So this is a very simple question. This is for your homework. I will also upload solved MCQ of this chapter after the class, because my next class now would be on 26th of June, the TDS concept till 26th June till 15th of July. So from TDS till the end of income tax, all chapters, TDS and return filing and computation of tax, that would be taken by me. Okay. So this question you can go for yourself, students. Owning and maintaining horse races, same income we need to be set off, and the time duration is 4 years. Okay. How there would be loss under business from owning and maintaining racehorse? How loss would be there? In any business, how loss generate? If income is less than expenses, that would be loss. In the same way, if there is a business of owning, maintaining racehorse, and the winning price, the stake money we called it, the winning price is not winning from casual income. The winning price, suppose I am the person who is maintaining the horses for races. And if my horse won in the race, whatever I am getting as a prize money, not as a betting, as a prize money, that's called stake money. That would be written over here. Suppose my winning for the whole year is 50 lakh rupees. And the expenses on maintenance and the club fees or any other business expenditure for salary of trainer, etc. Suppose that is 60 lakh rupees. So that will result in 10 lakh rupees of loss. So this is the way how there would be loss under owning and maintaining racehorse, and how there would be income. Obvious, if stake money is more than the expenses, there would be income. If stake money is less than the expenses, there would be loss. It's a normal category of business. So this is explained how there would be loss, how there would be income. And this is also important. Only those horse race would be considered under this head on which betting and wagering is lawfully made. So there are specific race courses in Mumbai and Delhi on which you can legally bet. So only regarding those kind of horse races we are talking about here. If there is any horse race upon which betting is not lawfully allowed, that would not form part of this business activity. In that case, you cannot deduct your expenses. So illustration number 4, also very simple. Just made that format and try to put these things over there, and you will get your answer. So let me see, we are having order of set off. Okay, so let me solve this question for you because we are having time. Now, income from owning and maintaining racehorses. 3, 4, 5. 75,000 is income from owning and maintaining racehorses has been given in the question. Income from textile business, that would form this category of income, 85,000. Brought forward textile business loss. Last year brought forward textile business loss. And brought forward loss from the activity of owning and maintaining racehorses from assessment year 23-22. So we are having 4 years. And in the current year, 4 year has not been elapsed. And in this case, there would be 8 years for set off. So again, 8 year has not been elapsed from this time duration. No other income information has been given. So there is no intra-head adjustment need to be done because there is no loss of the current year. There is no inter-head adjustment required because there is profit. So after inter and intra-head, we just need to reduce the losses we are having. So 50,000 we are going to reduce from this income. So the remaining would be 35,000. And 96,000 was the owning and maintaining racehorses. But we have only income of 75,000. So GTI would be only 50,000. And balance 96, 75, 21,000 is going to be carry forward. So you can see 35,000 would be my income and the balance 21,000, I guess they were remaining, need to be carry forward for the purpose of set off. Clear? And that could be transferred to next year. Now, order of set off of losses. First of all, if there is a business, as per the provision of section 72(2), brought forward business loss is to be set off before setting off unabsorbed depreciation. Now, what is unabsorbed depreciation? That must have been discussed under PGBP chapter. The depreciation which has not been absorbed by the profit of that year is called unabsorbed depreciation. That's a part of PGBP. And the setting of concept of unabsorbed depreciation also must have been discussed under PGBP. The unabsorbed depreciation set of concept says it could be set off against up to infinity time and against any income. This is the special character of unabsorbed depreciation. It's a part of your business head. Business head losses cannot be set off against any other head of income if that has been carried forward. But unabsorbed depreciation is having a special character. Even if it has been carried forward, it can be set off for infinite time and it can be set off against any head of income except salary head of income. Because business head losses or business head negative things cannot be set off against salary head income at all. Not salary and not casual. So unabsorbed depreciation is having most relaxed provision to be set off. Like section 3580 business is also having relaxed provision, but only regarding the time. It could be set off against infinite time, but need to be set off against same income, 3580. But unabsorbed depreciation can be set off from for infinite time and it could be set off from any head of income. PGBP, capital gain, house property, even when it is carry forward, but except salary and casualty. So that is those are the provision which must have been discussed with you under PGBP provision at that class. Okay. Okay. So what is the priority of set off? Suppose this is our PGBP, profit and gain of business and profession. That suppose this is my trading and P&L. Here would be sale and there would be current year expenses like purchase, salary, etc. After that, you will arrive this surplus amount before depreciation. Suppose this surplus is, this is my profit before depreciation. So after deducting current year expenses, now this order has been made. If after deducting expenses of current year, surplus is there, then how you are going to deduct different things one by one. So this order need to be followed. This is first one. After deducting current year expense, you have to deduct current year depreciation. If after current year depreciation surplus still exists, then reduced current year expenditure on scientific research and current year expenditure on family planning. So these points must have discussed with you under PGBP head. After these, if surplus exists, suppose after this there is loss, then there is no need to reduce anything else. But if surplus continue, then you will allow brought forward business losses. That means last year business losses, whatever we are having, carry forward. If after business loss surplus remaining, then you need to reduce unabsorbed depreciation. That means previous year's depreciation which has not been set off yet. If still surplus remaining, then you will reduce unabsorbed capital expenditure on scientific research and unabsorbed expenditure on family planning after that. So these were current year capital expenditure of family planning and scientific research. These are preceding years unabsorbed. That means old scientific research expenditure and family planning you need to reduce. So this is the priority of set-off. You can go through with this illustration also, students. Now the last topic is just for 1 minute. After that, we will try to solve some test your knowledge question. To claim the benefit of carry forward and set off, there is a very important section, that is section 80. It says, if you are having business loss and you want to carry forward it because you are not able to set off these business loss under intra head and inter head. So you want to carry forward it. You are having speculation business losses and you want to carry forward it. You are having specified business losses, section 35 AD, and you want to carry forward it. Because these losses you want to carry forward for 8 years. These are for 4 years. These are for infinity years. The capital gain you want to carry forward for next 8 years. Owning and maintaining race horses losses, and you want to carry forward these losses for next 4 years. So if you want to carry forward these losses, there is a main requirement. You have to file your return of income. We called it income tax return. You have to file your income tax return under section 139(1) within or up to due date. So there is a due date of filing of return, as we have discussed in capital gain, 31st July or 31st October in some cases. So if you want to carry forward your losses, this is a very, very important requirement that you have to file your return of income within time. If you are not able to file your return of income up to the due date as mentioned under section 139(1), we are going to discuss section 139(1) under return filing process also. And in that section 139(1), there is section 139(3), which talks about the return of loss. And there also this provision is connected that you have to file your return of loss if you want to carry forward these losses within due date as specified in section 139(1). If you forgot or if you are not able to file your losses under section 139 due date, then your losses will be lapsed forever. Lapsed forever. Listen carefully. Your losses are going to be lapsed forever. If you forget to file your return up to due date, you cannot carry forward that loss ever. You think, okay, this year I forgot, next year I will file on time. No, if this year you forgot to carry forward your losses due to not filing of your return within a specified time under section 139(1), then let me tell you, all that loss is going to be zero. You cannot carry forward it further to any year. But can you see, there are one loss is missing. There are one loss regarding which it has not been said that you not filed, and that is house property loss. House property loss can carry forward even if you filed your return of income after due date. For all these losses, this is mandatory. But for house property losses and unabsorbed depreciation, this concept does not apply. It has not been determined in pursuance of a return filed under section 139(3). The name of this return is return of loss. That is going to be discussed in detail under return filing chapter. So you need to file a return of loss, but the time is specified under section 139(1) due date. Okay. Thus, the assessee must have filed a return of loss under section 139(3), but it should be filed within the time allowed under section 139(1). And you can see this exception over here. The condition does not apply to the loss from house property. That means if you filed late, still you can carry forward house property loss and unabsorbed depreciation carry forward in section 32(2). These are the recap, of course. Now let me see the query session. Then we will solve test your knowledge questions. Okay. Okay. John is saying, sir, if, for example, father transfers business to son but not died then, so that is not a transfer as succession. So in that case, the losses cannot be used by the son because it should be a succession by inheritance. Priya is asking, how is carry forward loss of speculation business set off next year? How, what does it mean? Whatever carry forward losses speculation, you have to file return of loss and then you can set it off in the next year if there is a speculation business income exists. Okay. Capital gain losses set off against salary. Why STCL cannot be set off from salary of 45,000? Because capital gain cases interhead is not allowed. Short term, long term. These losses can be set off only in the same head of capital gain. Capital gain losses cannot be set off from any other head of income, Mrs. Priya Mishra. Okay. Vinita is asking, why not carry forward house property loss? Because if default tax regime is applicable, then you cannot carry forward your losses. We have discussed that if section 115 BAC applicable, you cannot carry forward your house property loss. Nidhi is asking meaning of stake money. Stake money means winning price. As I have explained, Nidhi, if I am a horse in the business of owning and maintaining horse races, and if I participate, my horses are participating in any lawful race. So whatever the prize money, that is called stake money. Nishan is asking, sir, unabsorbed depreciation, if any, can be carried forward for indefinite period? Yes, it can be carried forward like that. So Chauhan is asking, order of set off only for PGBP? Yes. Return 139 wala, if extent wala ho to, due date if extended, then till that due date, that provision will work. So what are the due date under section 139(1) that we are going to discuss in return filing chapter. Pooja is asking, sir, if we have income and we have like speculation business loss, then we have to file return of loss and return of income both? No, that is the same thing. Return of income is having a column that what are the losses. If you have only losses, then you have to file return of loss. So if there is any loss, that means you have to file a return of loss. But if you are having income also, the same return form is having both capacity for losses and income. Sir, could you explain the unabsorbed depreciation carry forward if 115 BAC opted? The same indefinite time period you can carry forward and you can set it off against any income. There is no restriction regarding it. So losses from house property cannot be carried forward if assessee follow default tax regime. Soumya, exactly. Losses of house property cannot be carried forward. चौहान तेज प्रकाश सिंह, डेथ जरूरी है? यस, सक्सेशन के केस में डेथ जरूरी है. Okay. So those were the queries and we have solved it. Now let me show you the test your knowledge question number 1. I need to open this question on my other system so I would be able to discuss that question with you. So set off. You can tell that you will read this question. If you open that on my other screen, so we will be able to see the question when I'm solving it. And I'll show you how easy it is to solve if you're going to follow that format, what we were discussing. Okay. This is question number 1. What we do need to do, we can write it, read it the question. Income from house property has been given in question, computed. Income from business before depreciation has been given. Short-term capital gain on unlisted share. Long-term capital loss brought forward. This is not current year. This is old long-term capital loss from assessment year 24-25. Suppose it has been written, it is assessment year 15-16, 15-16, 15-16. Then it would be no effect on our question because 8 year has been elapsed already. Okay. So because in this case, 8 year has not been completed, so we can consider it for the purpose of brought forward loss set of case. Income from tea business, dividend from Indian company carrying on agricultural operations, current year depreciation, brought forward business loss, that is 6 year ago. So till 8 year, we can consider the losses. So it is only 6 year ago. If it has been written, it is 16 year ago. Then we also going to ignore this information. So this is the information. Now let me show you how to solve this kind of question. In this question, there's a very interesting thing. Income from tea business. That is the income of agricultural as well as non-agricultural activities income. And there's a ratio is 60% exempted and 40% taxable. You might remember it. So we will ignore the exempted part and we will only consider taxable part. Okay. Sure. Now let's solve this question. Kuch nahi karna hai. Just remember one thing. You need to follow the format. I'm not doing anything. I'm just writing down the format for set of provision. We have to make 5 part of the income. The first one would be PGBP. Second could be capital gain, then house property, then salary, then other source. Fine. Now the first was income from house property computed. That has been given in question. Income from house property has been given computed. That means it's the net income. You do not need to deduct 30%, etc. This has been given in question 1,25,000. And the question is silent regarding the default tax regime, etc. So if question is not saying anything, then always follow default tax regime. Clear? Income from business has been given 1,35,000 before depreciation. Business not mentioned, so we will consider it as normal business. Okay, other category, and that has been given 1,35,000, and that is before depreciation. So priority of set off says that before setting off any loss, we have to reduce the depreciation. So that information must be in question. We will find it out. Then the third thing is short-term capital gain on sale of share. Short-term capital gain on sale of share has been given in question 56,000. Now long-term capital loss has been given and that is brought forward. So I am not going to consider that information because brought forward or carry forward losses provision would be solved after intra head and inter head. So either you can write it down over here that long-term capital loss brought forward is 90,000. So we will utilize it later. The income from tea business. The income from tea business will fall in the other category. So this is other category, second business. And tea business is having 60% exempted, 40% taxable. So we will take the 40% taxable part. It was 1,20,000 students. So 40% would be 48,000. I hope it's clear. Next is dividend from Indian company carrying on agricultural operation. So I am receiving dividend from a company. That company is running agricultural operation. So would that dividend income be my agricultural income or normal income? Think about it and give me the answer. If I am receiving income from a company which is in the agricultural operation, so the dividend income for me would be an agricultural income or a normal income of dividend. Okay, somebody has answered. It's a normal income, of course, no agricultural. Well done, students. So the dividend income will fall under my income from other source, other income category. And that has been given in the question is 80,000. Current year depreciation has been given 26,000. So now I can reduce it from here, current year depreciation. After current year depreciation, the remaining would be 1,09,000. Clear? The last information regarding brought forward business loss. And that is it 6 year. So we will utilize this information later, 45,000. Now we are having our information. So now first we will apply the intra-head concept. First of all, I'll apply intra-head provision. Intra-head says in the same head of category of income, if there is any loss, then set it off against the same head of income, applying the exception also. So in PGBP head, I am having a profit of 1,09,000 and 48,000. There is no loss. So after intra head, my income would be 1,57,000. Under STCG, there is no loss. So after intra head, my STCG would remain 56,000. House property is having 1,25,000 income. So there is no losses there. And there is 80,000 profit. Now you can see there is no loss in any category. So interhead is also same concept. If there could be any loss, then we will try to set it off. So after interhead also the same answer would be here because there would be no loss information given in the question. So now only we have to apply the losses concept which has been given in the question. Long-term capital loss. Is long-term capital loss be set off against short-term capital gain? No. Long-term capital loss cannot be set off against short-term capital gains. So this loss would need to be carry forward more. So the 90,000 loss of long-term is need to carry forward. Cannot be set off against short-term. But 45,000 business loss can be set off against my business income. So my business income would be now 1,12,000. My short-term capital gain now 56,000. My house property income would be 1,25,000 and my other source income would be 80,000. So the answer of GTI would be 3,73,000 and carry forward of capital gain long term would be 90,000. So this is how you need to present your answer in the examination also. You have to show the GTI and you can show the carry forward concept also. So you can see how easy it was to solve if you follow this format. Now you must be thinking that there is no loss information in this question, so might be it is easy. So let me show a other question which is having loss information in the question also. Okay, if SSC occur loss in 35 AD in previous year and you opting out of section 115 BAC and then next year is opted. So if you are not able to carry forward the loss, you cannot set it off also. So that loss would be a dead loss. Soumya is saying, sir, loss from specified cause of 35 AD can be set off only against 35 AD, but if opt out of default tax regime. I am not getting your question, Soumya. Asta is saying, sir, in section 80 means it is not for current year inter-head and intra-head. Yes, it is not for current. Section 80 does not stop current year inter-head. But if you did not file your return of income, then after inter-head adjustment, whatever loss is remaining, you cannot carry forward those losses. Correct. Good question. Sir, if two business हो तो डैप कैसे अलॉट करेंगे? सेपरेट बिजनेस के लॉसेस गिवन होंगे, सेपरेट बिजनेस होंगे और उन सेपरेट बिजनेस का डेप्रिसिएशन भी गिवन होगा. ओके. So next question, let me show you. Yes, we can solve this question. The question says you need to solve this question by assuming that you are opting out of the default tax regime. So you are under optional tax regime. According to it, you have to solve this question. So you can go through this question, see this question, and then we are going to solve it. There was a query from Mr. Kevin. Kevin was asking about illustration number 9 of Vasudevan of clubbing chapter. In case of clubbing chapter, okay, the cross transfer you are asking. So Kevin, in that cross transfer, because Vasudevan gifted 6 lakh to brother's wife, and in response, brother gifted 5 lakh rupees to Vasudevan wife. So the common amount is 5 lakh rupees. So if any interest has been earned by Vasudevan wife, then only up to 5 lakh rupees the clubbing is allowed, because the common transfer of amount is 5 lakh. Suppose Vasudevan has been gifted 6 lakh and brother also gifted 6 lakh. In that case, whatever interest would arise on those 6 lakh, then 6 lakh clubbing is possible. But suppose in respect of 6 lakh, if brother gifted only 2 lakh rupees to Vasudevan wife, then clubbing provision would be applicable only upon the common value. The common value is only 2 lakh rupees. So up to 2 lakh rupees, only clubbing provision would have been applicable. Soumya is saying, sir, losses from specified business can be carried forward if SSC follow optional tax regime. Yes, Soumya, this is correct. Yes, carry forward 21,000 is right, Mr. Tej Prakash. We have discussed that thing. Yash is asking, exam में आपके format से कर सकते हैं. This format will give you the correct answer, and after that you can show in the format that this kind of losses is remaining and balance can be carried forward. Okay, this will work for your working or fair note also. But in the examination, kindly after solving these set off, you need to show your losses and carry forward in this format, whatever has been solved in the study material. So you might have read this question. Now let me solve this question. After that, we will close this session. Test your knowledge, question number 2. So Mr. Sohan submit the following details. And now what we are going to do, again, the same thing. This is my PGBP. This is my capital gain. This is my house property. This is my salary. And this is my other income. So income from salary computed has been given in question, 3 lakh rupees. I have written over here. Loss from let out house property has been given in the question. Now this is a loss of 40,000. Income from sugar business. So this is my other business. Sugar business is 50,000 has been given in question. Then losses from iron ore business in previous year 1920. Discontinue in previous year 2021. So iron ore business losses. This is brought forward losses of 1,20,000. 8 years has not been lapsed. So we can utilize it for the purpose of setting off of brought forward losses after intra and interhead provision. Now we are having a short-term capital loss of rupees 60,000, and we are having a long-term capital gain of 40,000. Now we are having dividend income of 5,000. Now income received from lottery winning. Lottery winning would be my casual income. So lottery winning income has been given in question, 50,000 plus winning from card game, one more casual income, that is 6,000 has been given in question. Agricultural income has been given 20,000 students. Agricultural income, that would be my business income. So this is my agricultural income, but this is exempt, so I'm not going to consider the value of that income at all. Now, short-term capital loss under section 111A has been given in question 10,000 also. Bank interest on FD, that is 5,000 has been given in question. This is my question, and it says you are under optional tax regime. You have to solve this question. So first of all, we will follow the intra-head concept. Under intra-head, you can see under PGBP, there is no loss has been given. So my PGBP income would be 50,000 after intra-head concept. Can we set off our short-term losses against long-term? The answer is yes. So we can utilize 60,000 losses out of long-term, but only profit is 40,000. So remaining 20,000 short-term capital loss and remaining 10,000 short-term capital loss under section 111A. Clear? Total is 30,000. Now, because it's a capital gain head loss, so it would not be under interhead, it would be carry forward, but we will show it after interhead calculation. Now we are having 40,000 loss from house property. Under intrahead, there is no house property income, so we have to write it down like this. Under salary head, we are having 3 lakh rupees income. Dividend and other source income is 10,000. And my casual income is 56,000. So after intrahead, this is the position. Now we are moving on to interhead. After interhead, there is no PGBP. Now you can see we are having 40,000 house property loss. And we are having PGBP income to set it off. This loss can be set it off from PGBP also. This loss can be set it off from salary head also. This loss can be set it off from income from other source also. Out of this 10,000, we can utilize from other source also. Clear? But you can utilize it from any income. The GTI would remain same. There would not be any effect. So either you want to, then you can set it off from PGBP. If you want to set it off from salary, you can set it off from salary also. There is no issue. So we are going to set it off from salary income. So PGBP income will remain 50,000. Now capital gain losses cannot be utilized under interhead. So this is going to be carry forward. Now this loss, we are going to set it off from, suppose, salary head of income. Because it's a house property head and optional tax regime, it can be utilized. If it is a default tax regime, then this loss cannot be interhead utilization. After that, my salary income would be 2,60,000. My other source would still remain 10,000. And my casual income would remain 56,000. This is after interhead concept. Now what is remaining? The loss of 1,20,000 of iron ore discontinued business. 1,20,000. So this can be set off only against business head. That's why we did not utilize this house property loss from PGBP. If we utilize this 40,000 from PGBP, then we would only have 10,000 rupees remaining. So always utilize your losses against salary head of income, because salary head of income must not have any losses of brought forward. So it is a priority that please use your losses, if possible, against your salary head of income and income from other source. PGBP head of income must be utilized at the end of, after exhausting of all salary head of income and income from other source. So out of this old discontinued business, which was having loss of 120, we can utilize 50,000. So now the profit of this business would end, and the remaining losses of 70,000 we will carry forward. We are going to carry forward 30,000 capital gain losses also. Now the remaining GTI would be total of this 260 plus 10 and 56. That would be 3,26,000. And these would be two carry forward of losses. I hope it's clear, student, now. So kindly solve the illustration I have given for homework, and also the remaining test your knowledge question for your homework. If there is any query, you can ask me in the next class. That would be on 26th of June. Let me see if there is any query. You can ask me if there is any query from your part also. Tej Prakash, even if business has discontinued, I have shown you an example that business has been sold to someone else. Still, it would not affect. The losses was with you. So business run or business discontinue or business transfer, it would not affect the set of provision if that time limit of 8 years has not been elapsed. Priya Mishra, if it was the last year for carry forward of business loss, then if it is the last year, we can carry forward, we can set it off to 50,000 and the balance cannot be carry forward. If this is the 8th year, we have utilized 50,000, the remaining 70,000 would be a dead loss. It cannot be carry forward. It would be treated as zero from next assessment day. Any other query, students? We see if there's any query on the portal. No good query on the portal also. Tanisha is saying all clear. Thank you. Thank you so much, students. If there's any query, you can ask me. Otherwise, we are going to close the session. Session was great with you, sir. John Tej Prakash. High five from Wi-Fi. Thank you so much. Harshada is saying if there's possibility that in question provided that no return filed for any specific loss, then we need to ignore right. No, if the question says that the return of loss has not been filed, then you have to write it down that this loss now cannot be carried forward. And now suppose in illustration 2, the business loss which was discontinued, if that has been mentioned that the last year return filing was not possible or return did not file, then we have to see that we are not able to carry forward that loss in our year also. So that return filing date is very important. If it is attached with any loss information, you either cannot carry forward it for future, or if it has been written that the last year return has not been filed within due date, then you are not able to carry forward and utilize that loss in this current year end. Anything else, students, you want to ask? Okay, so I guess there is no more. Ishan wants to ask something. Soumya, I have explained this, your question. Losses from 35 AD business losses cannot be carried forward. Let me tell you, Soumya, if you are following default tax regime, there would not be any 35 AD business exist. So how can there be losses? That is not possible. Sir, for carry forward for every year due date filing mandatory or for first year. Every year return filing is mandatory if you want to carry forward your losses. Ishan wants to ask something. Yes, Ishan.
Sir, I want to ask, like, if we already brought forwarded some loss, but in the next assessment year we didn't file return of loss, so can we still carry forward that brought forwarded loss? No.
Even if it's a current year loss or if it's a brought forward loss, if you are not able to file return of income up to the due date as per section 139(1), then for future, all those previous losses and current year losses would be zero. That is nil, dead loss. We cannot utilize it for any further year.
Okay, sir. Yes, sir. Thank you, sir.
Okay. Yes, she's asking, sir, loss from house property be set off from house property, PGP and salary in any ratio. No, there is no ratio mentioned. As I've told you, kindly utilize those income first for setting off loss in which there could not be any loss. As salary income would not have any loss of preceding year, income from other source like dividend interest would not have any loss from the preceding year. So first of all, utilize these limit. Then only try to utilize other limit if that is possible. Yes, utilize in the best manner, of course. So, Mr. Manish, can we close the session now? Yes, done. Okay, thank you.